Yeah, I'm losing my
Long
edge.
US dollar, short options trades, options coming very soon to the small exchange futures markets. We're working on that like a bunch of crazy people over here, getting through all of the red tape that goes along with uh, it was a big task to launch futures, and it's also a big task to launch options on futures. If it was super easy, you'd see a ton of new futures exchanges with options and everything sprouting up, but we are working very hard. Until then, I want to give some alternatives because this US dollar market has finally shown that it can move higher here. It's been a real rough go since the pandemic news broke out in February and March of 2020. And as you can see here, I drew a little trend line on this chart, and it's a little bit of a nod to the fact that we did a great seminar yesterday. If you haven't seen it, go to our YouTube channel for the small exchange on technical analysis. I'm not a technical analyst necessarily, but I did want to put this trend line on there because, as you can see, there's been a lot of selling in US dollar. And not only has it been a lot of selling, but very small, futile bounces in this US dollar product, really until March of this year. So it's been a full year of selling here in the dollar market. But what we've seen is finally a bounce that actually has sustained itself a little bit and built in some ground to the upside in the US dollar. And that's why I think, you could have been fishing for the lows all across this line. I mean, Pete and I knew this. We got in too early at 153 and 152 and had to ditch out of those positions. And then again, we're in here playing around 147 and 146. And thankfully, we have seen a little bit of a bounce off of the lows of 143. But I think that this is the first one where you can confidently say it looks like back and forth is back into this market. And I can, on a day like today where the US dollar is actually down, I can look into getting some long US dollar exposure because it seems like they've finally awoken and shown that they can rally here. So with that being said, a thing that's great about option premium and everything else is that it allows you to buy a market with theoretically a lower break even. That's why when you buy, per se, GameStop stock, you can sell a call against it and have your break even lowered by the credit of that call. And that's what I want to look into today. It'll be really nice when we have those SFX options because you could, for instance, just buy the 145s in the SFX futures, sell the 147 or 148 call, get a nice chunk of change, move that break even down to those prices that we saw a couple of weeks ago at those lows. But like I said, this market's awakened. It's not at those lows, so you're not getting the best price necessarily. But I mean, if you tried to find the best price for the last several months, you'd probably be out a good amount of money. We're going to work down that break even near those best prices that we saw a few weeks ago with some options on the US dollar's competitors. And with this, keep in mind that SFX, the small US dollar future from the small exchange, it is US dollar against Australian dollar, British pound, euro, Canadian dollar, Japanese yen, Chinese renminbi, and Mexican peso. And so there's the inverse relationship. So if I'm buying US dollars, I want to, in theory, sell a call against my US dollars to lower that break even and get me a better long price, theoretically, I actually need to be selling puts in those competitors until we get those options going from the small exchange. So keep that in mind. And you can see it play out here over the last several months of performance, whereby the US dollar is the underperformer in this bunch. It's down about 5% since the start of 2020, down more than 10% since the highs that the US dollar saw right as the pandemic news was coming out. And you can see there that most of the other currencies are in positive territory for the same time frame. That Australian dollar is up huge in this time frame after being down almost 20% at one point in 2020. So yeah, a lot of movement here, but you can see this relationship of US dollar lower, the rest of these currencies that it's against are higher. And so we do, if we bought US dollar, we bought the SFX futures and we sold calls in, say, the Australian dollar or the British pound, it looks like the best value, right? But you're actually just doubling up because if you're selling calls on Australian dollar, you're getting short Aussie and thus long US dollar, and then you bought the US dollar futures, so it's a long, there's no offsetting hedge there. So it looks like the best way to do it, but It's actually not a hedge there because you have to be selling calls in US dollar is actually selling puts in these competitors. And I just wanted to bring up the weightings here because what I want to do is find a good middle ground between a currency, a competitor to the US dollar that has a high weighting and has a good value in terms of selling puts. And you see here the highest weighting is that euro, second highest the Chinese renminbi, and then Japanese yen, British pound, and then we start getting into single digits as we get lower, and that gets less interesting to me. Now, what is a nice middle ground to me is that yen at a nice 16% there, almost a fifth of the index. And it's actually the only currency here against the US dollar that in the last, call it 14, 15 months, is negative. And so now I'm getting a good value in a currency that is a pretty significant weight of this US dollar product. And so I'm going to map out a couple of short April put spreads in these competitor currency markets that get me about $100 in credit. And thus, if I buy SFX at say 145, and then I sell that 6J yen put spread, and I get the $100 in credit, now my break even on SFX is actually down to 144. I've in theory engineered a covered call on the US dollar market, and you can do this in whatever currency you want. I've mapped it out in oh, that's not S30Y. What are you doing here, Frank? That would have to be the Canadian dollar. Sorry for the mistake there, but this is live television at its finest. Not television, actually. It's an internet show. Whatever. Let's not have that existential question right now. We've got other questions to answer, which is choose the currency that you think presents the best value and also a significant weighting of the US dollar. Long the SFX, short some April option put spreads in here. Try to get around $100 in credit. That gets your break even down $1 on your long SFX position. And you have a long US dollar short option trade.